Today, we're cracking open the playbook of a true legend in the resource world, Rick Rule. What we're going to do is distill decades of his hard-won experience into a really powerful framework for doing one thing, finding incredible opportunities in places no one else is even brave enough to look. So think about this for a second. What does a legendary investor actually buy when all the news is terrible and everyone else is hitting the panic button? Well, the answer isn't just some clever tactic, it's the very heart of a powerful contrarian strategy. It's all about learning to buy what is truly deeply hated. Okay, let's dive right in. We're going to start with the foundational thinking, the core philosophy that drives every single decision in this playbook. At its heart, the philosophy is a pretty simple but really powerful three-part framework. First, you've got to deeply understand the commodity cycle. Second, you have to maintain absolutely strict capital discipline. And third, this is the fun part, you leverage what he calls price optionality in these hated assets. Now, think of it this way. When you buy an asset for pennies on the dollar, your downside is pretty limited, right? But if that cycle turns, your upside could be almost unlimited. That massive, lopsided bet, that's optionality. What's fascinating is just how predictable these cycles can be. It's like a three-step dance. Step 1, the price of the commodity itself starts to move up. Step 2, the stocks of the companies that produce it, the equities, they follow that price higher. And then step 3, those juicy high prices encourage so much new supply that the market gets flooded and boom, the party ends. Understanding this rhythm is the absolute foundation of the whole strategy. So we have the philosophy, but how does that translate into principles you can actually use? Well, this next section is all about shifting your mindset away from following the herd to truly thinking like a contrarian. And this quote just nails it. It perfectly illustrates the core job of the investor here. See, it's not about being popular. It's about being right when it really counts. You have to get in position before the crowd shows up, while the fundamental math, things like supply deficits and underinvestment, is completely ignored and mispriced by the market. And let's be honest, this is the hardest part psychologically. You will almost certainly look and feel wrong for a while, maybe a long while, before the market proves you right. This slide really puts it in stark contrast, doesn't it? The average investor, the crowd, they're drawn to what's popular, what's getting good press. The Rules playbook, it does the exact opposite. Your job is to actively hunt for the assets that are hated, ignored, and basically left for dead. Now, here is a part of the playbook that really, really goes against the grain for most investors. Holding a huge position in cash. But in this strategy, cash isn't passive. It's an offensive weapon. It's your war chest, kept dry on purpose for those moments of maximum panic when other people are forced to sell their best assets just to stay alive. That's when you strike. So what do you actually buy with that war chest? Rule often uses what's called a barbell strategy. On one end of the bar, you own assets with direct, leveraged exposure to the commodity price. But on the other end, you own what he calls better business models. These are royalty and streaming companies. They get a piece of the action when prices rise, but they aren't exposed to the massive costs and all the operational risks of actually running a mine. It's a way to get the upside while insulating yourself from some of the industry's biggest headaches. All right, so we've covered the theory. Now let's make this all really concrete. This next section walks through 3 real-world case studies to show you exactly how this playbook gets applied in today's markets. First up, uranium. Talk about a hated asset. For years after the Fukushima disaster, it was completely untouchable, totally uninvestable. But underneath the surface, a massive structural supply deficit was building the whole time. So the crucial point here is to separate the long-term thesis from the short-term noise. The structural story for uranium is this massive long-term supply deficit. It takes a decade, sometimes more, to bring a new mine online. But tactically, the price can get choppy. A big financial buyer can push prices up, and then when they take a break, the price can dip. A contrarian uses those dips to build a position, never ever forgetting that powerful long-term story. Next up is silver. It's an asset famous for its super quiet periods, followed by absolutely explosive moves. And the reason why is just fascinating. The key concept here is what Rick Rule calls small pond dynamics. See, the entire market for silver mining stocks is tiny. It's just small. So when big generalist investors eventually get interested in precious metals and they decide to shift even a tiny bit of their capital from gold over to silver, that money acts like a fire hose in a bathtub. It just can't be absorbed, and it causes the prices of these little stocks to go absolutely vertical. Our final case study is oil, a sector that is deeply, deeply hated right now for both political and ESG reasons, which, as you know by now, creates a classic contrarian setup. This table lays out the bet perfectly. The market basically believes that oil demand is going to peak very soon, making any long-life reserves worthless. The whole ESG narrative punishes these companies. Rule's view is the polar opposite. He thinks demand has a very long tail, which means those reserves are incredibly mispriced. He sees the market's hatred and the supply constraints that it creates, not as a risk to be avoided, but as the very engine of the entire opportunity. So, after all that, how can you start applying this thinking yourself? In our final section, we're going to distill everything we've just learned into a simple, actionable checklist. And here it is, 5 simple steps. 1. Find what's hated. 2. Do the homework to confirm the fundamentals are actually there. Is supply truly constrained? 3. Pick your weapon, whether it's the commodity itself, a royalty company, or a producer. 4. Always hold cash so you can pounce on those opportunities. And finally, step 5, which might just be the most important rule of all, you will be early. Just accept it. Plan for it. Size your positions so that you can afford to be wrong for a long time before you're proven right. Survival is the prerequisite for success in this game. And that's the playbook. It's a clear, logical framework for investing in cycles by going against the grain. So the only question left is the one right there on your screen. Now that you have the playbook, which hated asset class will you look at first?